All right, I think we should start now. We'll keep on adding investors as they keep on coming. Okay, good evening, everyone. Thank you so much for joining in for on Saturday evening. My name is Akash, and I'm the Chief Growth Officer at Best Data. I'll be your host for today, and we have Gaurav over here with us. Gaurav is the founder and CEO of Home of Marketing. Okay, one of a kind of business which I have came across. So we'll go through this session, and Gaurav will take us through, and explain us Home of Marketing. Now, the structure of the session is in such a way that will take around 15-20 minutes to understand the business, and then we can move forward with the Q&A session where either you can raise your hand and unmute yourself and ask questions, or you can put your questions into the chat box, and I'll be happy to address that for you. Okay. With that being said, uh, I hand it over to you, Gaurav. Over to you now.
Thank you. Hi, everyone. Lovely meeting all of you all. Um, so I'm the founder of Home of Marketing, and what we intend to do is we want to maximize the value of excess inventory of all the brands globally with sustainability. A little bit about the team. We were bootstrapped. But currently we are a team of 13 plus people. Um, me being the solo founder. A little bit about me. I was with KPMG Pearson's as financial analyst and then moved to marketing. I was the national marketing manager of Shopper Stop. I was the lead digital for Farm Easy and head of marketing for Soul Store, and then started off with Home of Marketing, and moved to this model in August 23. We have Arvind, who leads all of our digital operational activity, who comes with a 15-year experience in media. We have the team with sales, operations, and um, um, sales operations, and largely the distributor and trader acquisition team. Now, whether the business cycle, it's at its peak or at the lowest, um, at a recession, there will always be excess inventory of brands, which is generally 5% of brands turnover. Largely happens due to either mismatch of forecasts or just shift in the business dynamics, etc. Now, the size of the problem uh, in India, it's a $30 billion market of excess inventory. In the US, this is a far larger problem with it being 780 billion. Due to this, the rents of the warehouses are shot up drastically. We'll discuss the market sizing a lot more. Now, what the brand actually does. So let's start with the whole pathway of how the brand actually moves their excess inventory and where we come in. The very first thing which the brand does is they discount their products at and give it to their distributors. For example, egg box pay, egg box free. If you are a retailer, they give you buy one, get one, etc. Um, that being said, once the inventory is still left, then it moves to the second channel, which is the liquidation channel, where that is where the stock lot guys or liquidators come in play. Now, what they end up doing is they make a very sharky offer only because they have to invest their capital in it. Also, the products can either be sold or not. They sometimes just buy the best products and leave the rest, so on and so forth. So there are multiple problems working with liquidators, including the inventory being sold to their distributors. Um, so there could be a trade value reduction as well. The last option, if the liquidation option doesn't work, or rather the deal is not set, then they start to destroy the products. Problem with destruction, massive environmental damage. Just to give you an example of one of the companies, um, it takes 207, 202,700 liters of water to create a t-shirt. And 1 ton of t-shirts is around 6,000 t-shirts. H&M destroys 12 tons every year. So this is a really massive problem for H&M and similar brands. Uh, with one of the brands, Burberry. This took place in 2018, where they tried to destroy at least $2 billion worth of their inventory. And because of the backlash by all the customers and the users, they had to withdraw their they had to withdraw destroying all the products. In fact, France has a rule to not destroy any products. So they have come, so this is done legally in France, and I'm sure many other countries will follow. Now, since we have already seen the problems of what happens if they take it to the stock lot or destruction, this is where we come in and we try and fix the problem. Uh, in the stock lot business, you generally end up not getting the value which the brand deserves, right? What we've done is we've tried and created a solution to solve that. We do a barter with the brand. Now, when I say barter, this is how it typically works. The brand gives us product plus money, right? So they give us cash plus the product. So it can be in the ratio of 80-20, 90-10, etc. 80 to 90% of it is the product, and the 10 to 20% is the cash. Now, once we receive this, we promise them, or rather give them media in exchange. Now, this media largely is the digital media which we provide to them, which is the top funnel activity, top funnel marketing activity which we do. We take the product which we receive and distribute it in our own uh, distribution channel, which includes Horeca, resellers, corporate gifting, traders, distributors, super stockists, so on and so forth. Right. So this is how we typically uh, um, end up create. This is the business model. Just to give you a little more deep dive with some numbers, Boat is a client of ours, but the amounts here are just for representational purpose. Now, Boat gave us 1 crore worth of products and MRP value of products, and they gave us 20 lakh worth of cash. What we promised to them was, hey, with this amount, we will give you 10 million impressions on Spotify as well as Snapchat um, for the 1.2 crores, which you've provided to us. Um, then we push the products internally for valuation to our distributors. They do the bidding. Once whoever wins the bid, we give them the products and they take it on a cash and carry basis. So they have to pay us advance or a token once they win the bid. So hard commitments are largely made. The unit economics generally, or the campaign economics of this is there will be revenue from the sale of goods, which will the 1 crore worth of products we will sell at 20 lakhs, which is a discounted value. We've also gotten some amount from as campaign revenue. We end up giving them the media, or the cost of media would be 30 lakhs, right? And the PNL, generally we end up with a 10 lakh. Largely to say the unit economics, we end up with an EBIT of 20%. That is the margins we generally work with before we structure any deal. We started off in 2023 August, and the journey has been fantastic so far. We've seen nothing but growth. We started off with one single other employee, which was Akash, and Arvind was a consultant to us. Our first client was Wow Skin Science, but we didn't stop there. Bombay Shaving Company was also one of our early clients, and till date has repeatedly given us month on month at least 1 crore MRP of products every month. Boat as well, we've done multiple campaigns with both, and they are still customer for us. We have the Safilo Group, which owns Moschino, Beckham, Carrera, and other sunglasses. Asian Paints, Ricket Benckiser, Electrolux, Happilo. We've also just bagged a deal with Java Bikes, which is a Mahindra company. The agreement's been signed by one side, which is me, and we're waiting the other side to sign it. Um, so Electrolux as well, because they found this at such super value, they've done a second deal in the next within they gave us the first deal in September and the second deal in January of 25. So we've got quite a few repeats, which is almost 50% of our business. 50% of the clients end up repeating us. So far, we've touched GMV worth of approximately 70 plus crores. Now, you would be wondering why would brands choose us because they have such huge agencies already working with them. How are we different, right? Um, what we end up doing is uh, the agency also has some margins inbuilt, plus they take some from the brand as well. What we end up doing is we foregoing some of uh, the margins which the agency actually has. So a Mindshare or a Madison, etc., would have some percentage which they get from publishers. We end up don't taking that, or we end up giving that to the brand. Um, Apart from that, we also remove the headache of the excess inventory from the brand. Plus, we give them something of a much more beneficial value to them. Um, uh, and that is why they kind of choose us. Um, right. So, and of course, the perceived value of the brand's excess inventory is what they look at, and we give them the best benefit. At the end of the day, they also don't have any opportunity costs like carrying costs, cost of destruction, returns or bad debts, etc. So none of this is, we solve all of these problems for the brand. Our current revenues now in 2023-24. Now this is not the GMV revenue I'm talking about. This is the actual transactions which we work with. Now FY 23-24, we closed at 2.5 crores. This year, we've already touched 11 crores. We expect the year to end more than 13 crores for sure. Um, Keeping our 20% margins intact before taxes. So our superpower, currently we have 15 plus distributors who have given us the product revenue of more than 5 crores. Um, uh, and they have the potential to buy at least uh, 30 crores worth of product from us. This is what we want to increase. Um, and, and this will increase with the more brands which we have on board. We would like to increase this network to 1,500, and this will then have a potential to do at least 3,000 crores worth of revenue, right? Um, we have just focused on 5 different categories so far, which is FMCG, personal care, electronics, apparel, and lifestyle. And we intend to focus largely on these categories moving forward, uh, as well as auto or EV category included in this now. Now, this business is not new. In the US, barter um, is a fairly mature market. Um, in India, it's in a fairly nascent stage. Uh, in the unorganized and high capital requirement, you have the stock lot or the traditional guys. This happens across the world that they invest in your stock, right? But they are extremely unorganized sector. We then have the barter market in India, which is Barter Clan, One Up. You'll have multiple others doing at a smaller scale. They are highly unorganized and they end up not giving what they promised, and a couple of other problems which the brand have faced in the past with them, right? That's where we come in. And then you have the marketplace model. In India, you have one which is called Access to Sell. It's raised 1 million so far. And in the US, you have Ghost.io, which has raised 26 million. They are a simple marketplace model. There are multiple which exist in the market where they just they onboard the brands and they onboard the traders. And if the deal happens, then fantastic, right? In this case, you don't need too much of capital, but it does not solve the brand problems or the excess inventory problem. Largely, the brand wants to offload the inventory as fast as possible. That's where we come in. We are an organized barter player. We help solve the inventory problem for the brand. We take it on board. We give them the best price and we give them the much better media in return. Uh, right. So what are we? We are an ad tech plus a distribution company solving the problems of excess inventory or non-moving goods uh, for the brands, hopefully across the globe. Now, what we end up doing digitally or how we give the media is we buy the media from multiple programmatic platforms wherever we find the best costing there is. So we work with my DV360, Google, so on and so forth. Now, what we have created or are intending to create is an interface where the brands can come, upload the products, we evaluate the products, pushing it to our B2B community. They come up with a valuation. We then provide the same valuation in form of credits to the brands where they can run ads on our platform directly. Now, the the platform will be integrated through APIs with Trade Decks, MediaMath, and other programmatic platforms, right? So this is a self-serve platforms for the brands. Um, the brands then dispatch the products directly to our buyers. In currently we have some warehouses in Mumbai where we store the product. But lately, what we've been doing is we've tried to reduce the operations and we have started dispatching the products. We ask the brand to dispatch the products directly to the buyer. And this has been successful in companies like Beardo, Asian Paints, Electrolux, etc., including Plix, which is a Marico company. Yeah, so this is the interface which we want to create. We want to increase the value of it by giving them some media planning tools, which we currently don't do, and as well as creatives and assets which they can create, as well as influencer marketing. So we will be integrating some AI tools along the way to this interface so that it's a complete solution for the brand, right? And it is so much easier for them to just upload the products, run the ads, push the inventory to us. The second part of this interface is the B2B community, and which is the community enabler, where we will be acquiring institutional buyers, resellers, traders globally um, uh, for registering and bidding on our platform and buying the products. We also could, because we have so many products with us at a dirt cheap price, which we sell at a massive discount, there is also a potential B2C play uh, where you can become where you can become an affiliate or rather the affiliate model for multiple companies where we tie up with banks, gaming businesses, royalty and rewards business, etc. And we create this e-com platform where their customers can come and take the products from us or products from the website by using the points, right? So, for example, Tommy Hilfiger is our one of our clients, the licensee holder in of India. Um, the banking user can come to our website, redeem all the points, and uh, and take the Tommy Hilfiger or any other bags or Bombay Shaving Company products, etc. What this does is, because there is a massive fight of banks for giving the best, uh, you know, for giving the best um, uh, like usage to the users, and they also have to cut down on the costs of credit cards, etc. So this becomes a very convenient for banks to offer this solution to their customers. Uh, our plan, the first, second, and third year, um, we will be raising money for phase one, which is year one, largely year one plus year two, rather. Um, Now we expect, or rather, what we've seen in the past 1.5, 2 years, is that as soon as we increase the business development team, we end up scaling our business because we end up reaching the brands. Currently, we've been able to reach only 800 brands in India. There are more than 5,000 plus brands on Amazon only, which do more than 1,000 crore worth of business. So we expect we want to increase the business development team by 10x uh, to reach the 10,000 brands of India. Just by doing this, we expect to have a 10x scale, uh, right? Um, the digital self-serve platform is currently being built and is in the beta phase. We will be launching it to our internal existing users, existing clients first. Um, and we've also started testing the same concept in the US and the UK market, right? And we've currently have onboarded 30 plus traders from the community. We expect this to increase to 300 in phase one. In phase two, we will scale to the US and the UK markets, and also complete the automation of the self-serve platform and increase the 300 retailers to more than 1,000 traders, resellers, so on and so forth. So not just large distributors, but also smaller traders, etc., will also be acquired till that time, right? Um, we expect uh, within year 24, 25, we expect we've done a 13 crore GMV. We expect a massive increase in rather a 3x scale from where we are currently in 25, 26, right? In terms of GMV, we are currently doing 70. We will expect we should grow at a 3x scale. And moving forward, to at least 3,300 in FY 26, 27. This is the GMV worth of value. Just quickly, I would like to share the market sizing as well. Sorry. Yes. So, why invest in us? We have a network of buyers who can lift the non-moving inventory, which is a problem across the globe. Um, we have the potential to scale this up because we only provide digital media. No other barter company in India, or rather the larger barter companies, they end up providing hoardings and other traditional media. This is a complete cash and carry model. There's no credit involved, which is why we have been able to grow bootstrap to this level. Um, of course, it's a win-win for the clients. Brands want to tie up with us. and close deals. We are in talks with multiple other clients as we speak, right? And of course, margins will improve with scalability. We'll be able to buy the media better. Plus, we'll be, once we have a lot more traders with us, we'll be able to sell better. So at a much higher pricing than we currently do. Right. The deployment of funds, we expect a raise of 4 crores, which will be put, 30% of which will be put in operations for working capital needs, etc. 30, another 25-30% in tech. The rest in business development. Um, the brand, or rather the supply side, is what we call it. That will be one of the highest. And then we will have the demand side, which automatically gets created once we have a lot of brands and products on board with us. Right. So questions, if there are any, I think I'm pretty much done.
Thank you so much, Gaurav, for the wonderful presentation.
Yes. Thank you.
Yes, investors, we are open for Q&A now. If you have any questions, you can either go ahead and put it into the chat box, or you can raise your hand and I can unmute you and you can ask your question.
So there is one in the chat box where the brands would like to directly send the products to the distributor, the possibility that that they will directly approach the distributor. There is always a possibility, but at the end of the day, what we give them is far, or rather, the the benefits or the value which we provide to them is far greater than what the excess inventory or the liquidator or the distributor will be able to provide to them. So this is a mix of the media plus the cost of products, right? So plus the products. So this part they will not be able to crack. So which is why it is not a problem for us. They will not end up, getting, the brands may not end up getting what they would have gotten if they would have dealt with us.
Okay, I hope that answers your question. So, guys, if you have any questions, please raise your hand. I can unmute you, or you can put your questions into the chat box, and we can take it from there.
Awesome. I think everyone doesn't have a question. So I
That's
think
very
I've done
strange.
a
It's
decent.
happening for the first time that we don't have questions. So Bhargav has one question. He's asking, please provide revenue streams and future projections with margins.
Uh, sure. In 4 crores, what will be the dilution in equity and valuation? So the post-money valuation is 36 crores. Pre-money is 32 um, currently. And we are at a, uh, yes, we are planning to sell the products in the cross border. We are actually looking at the Africa market and the Dubai market, etc., for pushing some products right now. For example, Victoria's Secrets, and we are in talks with Victoria's Secrets and Victory Knox as well for the same. Um, but the deal's not gone through yet. Also, we are working with Agio as well. Uh,
Gaurav, there was one question, okay, which I think we
yes.
missed. Okay, the question was, uh, can you please provide revenue streams and future projections with margins?
Uh, right. So we will share this with you right after this call, the Excel sheet of the revenue projections. But we expect the next year business to 3x, and moving forward, doubling it up every year, right? That's what we end up expecting. And we expect the margins to remain intact at 20% and even become better with with time.
Okay, so can you shed some light about the current year's financials? You mentioned you're doing
Yes.
13 crores for this year, right?
Correct. So we've done seven. Let me showcase this. So currently we expect closure at we are at 11 crores revenue with a 22% margin. We expect to close the year at 13 crore revenue with 20% margins. And the GMV which we've done this year is 70 crores. So basically 70 crores MRP worth of products. And we've gotten a revenue of 13 crores.
Okay, so this year roughly we'll do around 2 crores worth of net profit, right?
Yes. Easily. 2.5 crores. We are on a track to do that. Uh,
So we have
right. So there is one quick question here. What is the time for this to get incorporated? I'm sorry, I'm not sure I got the question. So the company is already incorporated. Um,
no. So he's asking,
oh,
you're
the
planning
cross
to,
border?
yeah.
Yes. So we expect to start Africa markets or the cross-border markets in 6 months' time, largely, because it will take a lot more time for us to get into it. Um, because India itself has so many brands and business, right? We can easily do 300 crores worth of revenue just from India.
Fantastic. So there is one more question. Okay, uh, what is the team size and how much are you willing to spend on marketing, and also in numbers, where are you expecting your distributor network to grow?
Um, right. So team size is currently 13 plus, with four people in business development and the rest in warehouse operations, etc. Uh, Now we expect five in business development. Uh, Now, what we are willing to spend on marketing, largely to get supply of products, which is get the brands on board. That is done by a business development team, and or whatever salaries we end up sort of spending on them is what we sort of that's the spend which we calculate to acquire the user, uh, uh, or to acquire the brand. Um, the distributors also we are acquiring through the business development demand generation team, which currently has two people. We will expect this size to typically um, do a 3x to 4x of the existing size, and gather distributors, etc. Um, right. Of course, with a small budget on marketing, we will not be spending too much on acquiring distributors. We will be spending a larger chunk for brands to be onboarded for us, which is the supply side, is what we call it. Does that answer your question?
I hope that answers your question. So we have next question. What are the major sectors in this business like electronics, clothing, etc., and how do we plan to tap them?
Yes. So I will quickly just open the um, so largest sector here is electronics and fashion. That is what we want to uh, acquire. That is what we want to scale the most. Um, uh, so we are working towards electronics and consumer durables and fashion as a sector as well. I will share the exact market sizes along with what is the price at which we sell the products at, and their excess inventory which is available in each sector right after this right after this call.
Okay, perfect. So, guys, if you have any other questions, please go ahead and put it into the chat box. We can take it from there, and if not, then we can close this call. Okay, we have one more question. Apart from marketing, is there any other service that you would offer in future?
Um, yes, so we are looking at alternatives to marketing as well. And we will be doing some proof of concepts. Um, um, although as of now, I cannot comment, but what we can do is we can venture into the REIT space, where we give them a fraction of the real estate which we have. So because the REITs are typically uh, can have any perceived value, right? So that is something which we can work with in the future. Um, um, REITs or some financial product is what we could end up doing.
Gaurav, I would also like to ask if you can just shed some light on the exit proposition of investors. You know how we are going about the exit.
Yes, absolutely. So, there are two ways to exit. The first is IPO because we've been making money since quite some time. We'll have and we expect to make money all throughout the years, right? Keeping our scale intact. IPO would be a great option. People would love a company which makes revenue, great cash flows, right? Um, and the second option is, so there are larger media companies like the Times Network, IPG Group, the Mindshare or Group M, etc. They have tried to do barter in the past, but have failed. So they are some media companies would love to buy us out directly. So there is a high possibility that in this category where acquisitions are go throughout is something which we can work with. So this is a second opportunity for exit. Primarily, we'll try and work with an IPO.
Do we have a time frame for that?
Yes, so we expect the IPO once we hit a revenue of 1,000 crores, which is 5 years down the line.
Okay, perfect. All right, I think that's all. I don't see any new questions in here. Guys, last few minutes. If you have any questions, please go ahead and put it in the chat box or raise your hand. I can unmute you and you can ask your questions. We'll wait for one more minute and then we'll wrap the call.
Um, yes. So the REIT and the InvIT part, yes. So the REIT typically what we end up doing right now is very similar, where the media cost is different largely, right? So it is unknown for multiple things. We try and give them there is a something called CPMs in the media industry, which is called say cost per thousand views, right? Cost per thousand impressions rather. So now these CPMs typically we try and fix out, uh, and it's a little unknown. So the perceived value is far higher. Similarly, in the REIT, where one real estate next to each others are completely can be of there can be a major difference in the pricing that or the perceived pricing rather. So this is where we can have a play of barter where we take excess product from them and give them a part of the REIT. Now, the REIT can be either a hotel, villa, or uh, whatever. Yeah. So, the perceived value is something which we might want to work with. The current valuation post money is 36 crores. Um, we've
Saurabhji, the current valuation for home of marketing is 32 crores pre money, raising 4 crores, and post money it will be 36 crores. I hope that answers your question.
the calculations behind it. Would you like to take that up?
So he's basically Saurabhji is asking to justify the valuation.
Um, sure. So we've done so we expect 13 crores as the revenue. So it's a 3x of the revenue, largely. Mota mota. We will do one more future round before the IPO. We will just do a series A, which because we realize that if we want to go global, the US market it's fairly expensive to hire resources, uh, right? And which is why we would require one more round. So we will do one round in the next 2 years.
I hope that answers your question, Raviji. Perfect.
Um, yes, so there are, of course, barter companies in India which are propping up. There are barter companies in the US which are there, and you also have the stock lots, or the liquidators, which we are all competitors for us currently. The best part about this sector is that no one has an eye for it. So there is a which can take the market or get the market for these for this for sure. So there isn't any single winner so far. We really have that space to be number one, number two.
So we have one question. Mr. Jain is asking, what's the expected revenue post raising funds?
Expected revenue post raising funds is next year we will be doing so this was after we raise funds, this chart where we expect uh, thir- 30, 30, 45 crores worth of revenue in FY 25-26.
I hope that answers your question. Saurabh ji is asking, what is the PAT percentage for last financial year and expected in current financial year?
Yeah, yeah. So uh, profit before tax is roughly 20%. Um, we again the income is roughly around 20% is 20% tax bracket is I think what we fall into. We expect a very similar number this year as well. Largely because in each deal, based on our internal risk evaluation, we keep a margin of 20%. So that is something which we make sure that we do.
Okay. Do you have any idea on competitions that how much revenue your largest competitors are making up? And
Uh,
where we are in that particular race.
Yes. So Matrix is one of our competitors. It's a proprietary firm in Pune, and you have Network for Barter, etc. They've done revenues of roughly around 400 crores, but they've been in the industry for 20 years.
All right. So are they also PAT positive?
Yes, yes, yes. And they are profitable as well. Yes. They're profitable, but they are slightly unorganized. But the largest unorganized player are these two. Uh, so you have Network for Barter and Matrix Solutions.
So we have one question. It has been sent to me. Uh, do the numbers mentioned really justifies with only one round being post this round 26-27 in year 26-27 looks really unrealistic. So I think what he's trying to say is that after this you're going to only raise one round, okay, before going to IPO. Will that be feasible, and will you be able to manage the scale what you're showing without raising subsequent rounds before going IPO?
Um, yeah, so largely we end up we what we expect to do is reinvest the profits in the in the company itself. So we want to refinance the growth uh, largely. Uh,
So if you
um,
can go to the projection slide,
uh-huh.
it says that the GMV of 3,300 crores.
Yeah. So GMV, so roughly you will have revenues at 462 crores.
So that will be in 27-28.
Correct. So we expect it to be in the next 5 years. So 31, 32.
So this is year-wise comparison, right? That year one, year one,
Yeah,
year
yeah.
two, year three,
So
year four.
5 years from now. So basically 25, 26. So would be the first year, and then year two, year three, year four, year five.
So Ravi ji is asking the exit route for investors during IPO only, which you forecast somewhere 5 years down the line.
Or
Uh, yeah,
so we can come up with a exit route in between. However, I mean, based on the company's growth, we can always work out um, something before that as well,
so
right? So
Raviji, we all whenever we onboard a startup, we always go strategic with the startup and help them to as well facilitate these things. Uh, we can discuss this how we can plan the exit, okay, and accordingly we'll be there for you. Perfect. Okay, guys, I think the time is up. If we can take one more question, or we can wrap it up. So for investors, in general, if I have to explain how exit opportunities work, okay, it can go either through a secondary sale, okay, or it can be in a subsequent larger round which is being raised primarily by the startup, or it can be through an IPO, okay, or if there, as Gaurav mentioned, there is the possibility of acquisition and merger, okay. These are the four potential ways how an exit can be taken in home of marketing, right, Gaurav?
yeah, that's right.
And at any point of time, BizData is there to assist all of you. Okay, I think we don't have any more questions. Okay, so we'll wrap this up over here. Thank you so much, everyone, for joining in for the today's call. And just
Sorry, that I think there is one more question. If companies really such scenarios, um, right? So the companies do manage the inventory, or they've started using tools, etc., AI tools in the past 2 years now, is what I've seen. The warehouse management, etc. But no one can predict the business, uh, the business scenario, and that is where our opportunities will always exist. Just giving you five scenarios. Asian Paint started a furniture, a furniture division, and it didn't really work well for them, which is why, and they have the new designs coming up now because they had the old designs which people didn't buy or didn't like, so they end up giving it to us. Um, Similarly, even for Beardo, there are many aspects where, or rather, um, categories or SKUs which they come up with and it doesn't work for them. Just like even larger companies like Cricket and like Cricket Bankizer, where they also cannot, they came up with a product called uh, Dettol Fresh, etc., which didn't really work for them, and that is what they gave it to us. So the markets exist even for larger companies with huge resources, right? And all the tools in the world, they still end up with excess inventory at massive, massive scale.
so I think the opportunity here, as Gaurav mentioned, is rightly in till the time there will be innovation. If I can sum this up, till the time there will be innovation, there will always be a need of home of marketing. That is what we can say.
Yeah.
And looking at the competition, what you have mentioned, Matrix, which is they're working for like 20 years now. Uh, we can say that the future is bright.
Yes. And also uh, just to add, the one company in the US for barter just got acquired for roughly 3 to 400 crores INR. I will share the company name with you. It was with EY. Um, the, the deal was done in EY, so I'll just share that with you as well right after the call. Uh, it's the recent news which was given to me. Will Home of Marketing become a one-stop marketing solution for any company or no, no. So we want to stay in a business which is very difficult for others to come in, that is surplus inventory. So there is always a barrier which is there, and we want to be the number one in that front. We don't want to become any marketing solution company. We want to stay in this excess inventory space.
Okay, great. Well, thank you so much, everyone, for joining in for today's call, and thank you so much, Gaurav, for taking your time and walking us through home of marketing. I really appreciate everyone joining in on a Saturday evening, and take care. Happy weekend, guys. Thank you so much for coming in.